If you have ever fallen prey of digital lenders' poor debt collection methods or faced any form of violence from your creditors, your rights as a borrower could be at risk, at least according to the regulator.
Debt collection practices must avoid threats, violence, unauthorized contact, obscene language, and other abusive conduct, and recovery agents' details should be communicated to borrowers in case of delinquency. False advertisements are prohibited, and any changes to credit terms or interest rates require customer consent or regulatory approval.
At this consultative meeting of digital lenders and the microfinance regulator on guidelines developed for digital lending, chief among the list of challenges, right to data privacy.
If somebody borrows from me, whose information is it? Me who lends or him who borrows? Because that determines whether, if I give information that this guy borrowed from me and didn't pay me, have I fallen foul to the Privacy Act?
Because your KYC, instead of telling me you want to access all my dialed contacts or my list of contacts, because what does it mean? Are you going to call everyone in my phone book that I've borrowed money from you? You should use other means. Use eKYC for CRB companies, because a credit report is a collateral for me.
Despite having a Tier 4 policy in place, Rachel Muhwezi, the manager of microfinance institutions, says guidelines are meant to strengthen and streamline operations of the digital finance sector.
We have digital lenders charging 10% per week. What does it imply? 40% per month. If you're charging 8%, you're charging 6% per week. What does it imply? You're already beyond 30% per month.
The Bank of Uganda Payments Department says given the fintech's contribution to deepening financial services, tightening regulations on disruptions will help to expand accessibility.
I want to believe that we've tried to work together. There is no clear policy. The regulations do not ensure protection and enforcement of existing laws. As we can see, all of us, most of these issues raised by stakeholders are centered around regulatory environment. It's my hope, therefore, that this guideline will address some or most of the issues raised and eventually be made legally enforceable through regulations.
So the regulator need to understand. Then there was the aspect of credit information sharing. I think the lenders are not comfortable to share data for free and get it back at a fee. So that's a concern, but I guess we as bureaus or as New Grid, we need to cement our value proposition, because the data you have within your business is only restricted to your ecosystem. As bureaus, we bring on board more other data sets that you may not have, so we enrich your data-driven decision making.
According to the Microfinance Regulatory Authority, the guidelines for digital lenders are fair and transparent practice while safeguarding customer interests and information.